Lagos. Good morning, everyone. Wherever it is that you are listening from, this is Follow the Money, brought to you by Nairametrics. Of course, my name is Ugodre Obichuku, and I do this every Monday, 8 to 8:30 on this amazing channel. Yes. If you want to listen to any previous episodes of this particular program, of course, you can always go to any of your favorite podcast platforms or just go to nairametrics.com/podcast. You'd always see them there. It's just right in front of our homepage. Scroll down a little bit and you see previous episodes, and you can stream as well. You can listen to them. Yes, it's going to be a very busy week already. In case you're not following, there's a lot of stuff going on globally right now. It's as if the world is in standstill. Yes, in case you don't know, the markets are in red globally. We're starting from Asia. As you all know, Asia usually starts the market because they get to see the day before everyone else. And the Asian markets are in red. Crypto market in red. And the US futures in red. Like, everybody is selling off. Looks like it's trouble down the road. So what exactly is going on? I'm gonna break this down a little bit for you. But it's panic selling. If you have any US portfolio, any stocks in USD or any assets in USD, you might want to just check them right now, because it's likely going to be all red. All red, yes. The only thing that is green right now that everybody seems to be flying to or flocking to is gold. Gold prices are at record highs. It always happens all the time. Whenever the stock market or the capital market in general, whether it's fixed income securities, is going down, everybody flocks towards gold because they see it as a safe haven, as a safe bet. So that's what's happening. But around the world, Asia is like all down. US futures down. So what exactly is triggering this? Why are the markets red? Even the Nigerian Stock Exchange ended up red last week. I mean, but not the same with the global markets, because Nigerian stocks tend to do things a little bit differently. But stocks did end up red last week. But the major concern is the global markets, which I will speak to. But today isn't really about the global markets. Today, I just want to talk about, results. We're still in the earnings bleeze era, earnings bleeze month. So they're going to see a lot of results come up all through this week. I have so many that I want to touch on. I'm sure you've got some of those stocks in your portfolio. So you also want to pay attention to how the stocks in your portfolio are performing. Whether you should buy more or sell more or hold. You might want to pay attention as well. So what's happening globally? So it started last week, and there was some jobs report that came out from the US and kind of pointed to a weakening US economy. You see, this world is just strange. Over the last few months, the issue has been that the US economy is doing too well. It's too hot. Like, people have too much money. And so for that reason, you were seeing, inflation go up. And because inflation was up, people had too much money. The US Fed kept interest rates high as 5.5%. Because they thought the economy was just too hot. The US was churning out jobs, 250,000 jobs on a monthly basis and all that. We're like, man, when is this going to stop? You see the thing with this world and everything is that too much of a good thing is not good. Too much of bad thing is not bad. It's bad, right? So you just don't want it to be too good. You don't want it to be bad as well, right? You just got to be somewhere in the middle. And that's exactly what's going on. So the US market was just too hot. And then, so the US Fed, which is the equivalent of the US Central Bank, kept their interest rate really high just to slow down the economy a little bit. So the question was now, well, how high can it go, and how long can you keep it high? Is it not about time you try to maybe like slow it down a little bit, or should we just maybe hang on for a while? We're trying to wait to see some signals that will let us know, decide whether I want to take interest rate down. So that basically has been the conversation. And then last week, the US Fed said, well, looks like we're seeing signals that we might have to take rates down. And the conventional, opinion out there was that rates were going to be cut by 25 basis points. That's 0.25%. And so everyone said, okay, well, finally, looks like we're getting somewhere now. And people were even saying it was going to get cut as early as September. And then that jobs report just dropped towards the end of last week, and everybody was like, whoa, looks like things are not as good as we thought it was, because US have bellwether data. Once they see their jobs reports, once they see inflation, there's certain things that they see, non-farm payrolls and all that, drama. When they see those things, gives them an idea of how their economy is performing. Like investors know immediately. And so when that report came out, everybody just looked like, hey, look, geez, there might just be a recession staring at us. Because you see, the thing with keeping too much high interest rate is that when the interest rate is too high, right, it could affect economic growth. And when it affects economic growth, there can be a slowdown, and that slowdown can lead to a recession. And when there's a recession, it means that businesses are not doing well at all. And so you can juxtapose that to Nigeria, where our interest rates are still going off the roof. Look, I don't want to talk about Nigeria for now. It's just Nigerian stocks I want to talk about. So let's just stick to what's going on globally. Yeah, and so rates were that high, and now it's looking as if that high interest rate has now affected the US market in general. More than the US economy in general, more than everyone expected. And so that is driving fear down everyone's throat. And then to make it worse, as if we'd not had enough of data already that's giving us some kind of shock or some kind of scare, Warren Buffett, the world's greatest ever investor, now dropped his own bombshell. He sold half his holdings in Apple, the world's greatest company, at least for now. And everybody was like, wait a minute, what is going on here? If Warren Buffett can sell half his holdings in Apple over the last few months, what are we not seeing that this dude is saying? Because this is like the oracle, man. So what is he saying that we're not seeing? He sold so much that he now has over $270 billion in his bank account, more than Nigeria's GDP. Imagine that's what that man has as cash, more than our GDP, 7 times more than our external reserves. That's what he has in cash right now. And so he sold off, and then everybody's like, okay, like this is not funny anymore. This is not what we all expected. Warren Buffett has sold up. That means this market is about to crater. And so that's where we are, guys. So this morning, Asian markets, which typically opens first, responded and said, look, our fear is that the US market the US economy might be going into a recession. And then guess what now happened to the poor Indians? The Indians who are just on the other side of Asia as well. The Indians also just woke up and their currency dropped to one of the lowest in months, I think even in years, if I'm not mistaken. Because there's fear that all the capital that has flowed into India is now flowing out because people are now moving their money out. So this also has ripple effects on Nigeria, by the way, because now that everyone is scared, the so-called foreign investment that we're expecting, the foreign portfolio investment that we're expecting, I really don't know if it's going to come again. Because you need foreign portfolio investments to be into your country to at least keep exchange rate stable. I'm trying to connect the dots, but I really don't know. Anyway, that's what's happening globally, guys. We got to keep watching this. Follow Nairametrics. We're going to be giving you regular updates of this all through this week. Very important that we all protect our investments at this moment, because you also don't want what is happening globally to affect you. So you got to find a way to take position. There's always opportunities as well when the markets crystal, like especially when people think or people overreact. I personally think this is an overreaction. I might be wrong, but that is what I think. It might just be an overreaction. But I still need to see a bit more data to determine what's going on. But that is what has been happening globally, guys. I woke up this morning, I'm like, my God, I wanted this week to be a very, very, Emily kind of week, like a very hot, fun week. But looks like the market has a different message. So this week's really going to be dominated by what's happening in the United States, what's happening in Europe as well. And of course, let's remember, there's also been protests globally as well. Well, at least in most countries, even in the UK, where we thought that, they were a bit more, you know what I mean? We saw videos yesterday and we're like, what? You guys also loot? So it's kind of what's going on around the world, and there's just protests in several parts of the world as well. Even I think it's Bangladesh or so, one of those Asian countries as well. There's mad protests there. That is, giving everybody some kind of chill. So it's a bit of a very, very, ominous situation we find ourselves in at the moment. So let's just pay attention to news that matters so that we don't get lost in all of this. Of course, follow the money, follow Nairametrics. So we go right into today's gist, essentially. Like I mentioned, a lot of stocks published their result last week, and we're going to be looking at some of the results that came out. There's so many. I just hope there's enough time to go through all of them. So if you have shares in these stocks, you also want to pay attention to what's happening. And who knows, maybe what's happening globally also affects the stock. And we're going to go right into it. MTN. So we're going to start with telcos, and starting with MTN. MTN also released its numbers last week, its second quarter results, by the way. So according to the information we have, MTN second quarter reported a revenue of 786 billion. You heard me right, 786 billion. That's almost $1 trillion in one quarter. I mean, come on, man, these guys. That's 33% up in revenue. So as much as things are still bad, people are still spending a lot of money on phone calls and data. So this company is growing like wildfire, right? So growing revenues, top line 33%. And let's remember that telcos haven't increased prices. Well, at least that's what they tell us. They said they haven't increased prices at all. So they haven't increased price of data. They haven't increased price of phone, of making calls, right? But the revenue is still up 33%. But where they have problems, of course, is cost. Operating cost, however, increased by 137%, more than double, to 332 billion. And at the end of the year, at the end of the quarter, MTN still reported another loss, 175 billion, 38% higher than the year before. So it's looking ever more likely like this year is going to be a year of losses for MTN. I don't see how they get out of this because of exchange rate, by the way. And so it's not really because the business, the underlying business is not doing well, it's because of exchange rate. However, remember that favorite number I like to look at, operating profit. It was down 39% year on year to 130 billion. So that's a bit of concern for me. And at the end of the week, MTN ended with a share price of 190 naira, pretty much flat as well. So gradually getting into buying territory for me, because I kind of think that this is a one-time issue. At the end of this year, I kind of think next year MTN is likely going to get out of this. So I am looking for that right price to get in. But I'm not going to say it here. You're going to have to follow me on my daily podcast to know what price target we're looking at for MTN. And then we're going to Airtel. Airtel also published his own numbers. Revenue was up, was down 16% to $1.1 billion. Airtel reports in dollars, by the way. Pre-tax profit, they did eke out the pre-tax profit unlike MTN. And that's also because Airtel is Airtel Africa, so it's not just Airtel Nigeria, so it's the entire Airtel. Their pre-tax profit was up 134% to $74 million. However, there was a significant decline in Airtel's contribution, Airtel Nigeria's contribution to the overall group turnover. So Airtel Nigeria's revenue grew 33%, kind of like in line with MTN as well, year on year. However, in dollar terms, that was a huge decline by 51.6% to $256 million. So you see, even though they are growing in naira, in dollar terms, it really dropped. And this is really what a lot of multinationals are facing. So as much as you're posting revenue growth, by the time these guys convert that money in dollars, man, it's just pittance. You know what I mean? Like, doesn't really add up to anything much for them. And that's the challenge of this depreciation thing, this currency depreciation thing. It's really a tough one for a lot of companies, especially foreign investment companies that are doing business in Nigeria. So we'll quickly move on to the consumer goods section before we go on the break. So I'm just going to run down two companies that their results came out: Dangote Sugar and Nestle. So for Dangote Sugar, revenue was up 72% for the quarter to 172.9 billion. Incredible numbers there. Operating profit, however, was down 83% to 5 billion, which shows that the company had to grapple with rising costs, because the cost of sale, for example, was up 140%. To 163.5 billion. And of course, the company also incurred a huge finance cost, 109 billion. And so at the end of the quarter, we ended up with a pre-tax loss of 104 billion for Dangote Sugar. Tough for the consumer goods company. Share price 34 naira per share. About area where I kind of always wanted to be. Still needs to go down maybe a little bit more. It can be greedy like that, but 34 naira is the share price at the moment. Dangote Sugar has also loans as well, about 777 billion in commercial papers, and makes up about 141.3 billion of that of his entire loans. He has about 777 billion in loans or thereabouts. And then we'll move on to Nestle Nigeria, which is one of Nigeria's largest consumer goods company. Revenue 407 billion for the quarter, again up 55% year on year. But of course, if you do that in dollar terms, it's probably way lower than that. Nestle, however, managed to eke out an operating profit of 63.1 billion, up 4% year on year. Margins also dipped slightly to 15%. But of course, where Nestle has issues again is with dollar costs. Its dollar finance, its finance cost was also up to 315 billion in one quarter. So that's almost wiping out the entire, wiped out the entire gross profit. And so no surprises there that Nestle ended the quarter with another loss of 252 billion. Leslie claims that a lot of those losses are unrealized losses and unrealized FX losses, but I doubt that this is the case now, because at some point you have to basically realize those losses. And so Nestle also has negative equity, by the way, which in a way suggests that they could need to raise capital or revalue their assets. They got to be able to wipe out that negative equity, because right now it's almost looking as if the company is just owned by debtors, it's owned by its creditors. Because when you have a negative equity or you have negative shareholders funds, your company is essentially owned by its creditors, and Nestle's majority creditors are its foreign parent company or its parent company. So that is Nestle. We're going to go on a short break in a bit, where we will now come back and touch on a couple of banks that pushed out their results last week, and then if there's time, we'll go to the brewery sector as well. This is Follow the Money, brought to you by Nairametrics. Alright guys, welcome back. If you're just tuning in, this is Follow the Money, a Nairametrics show on Classic FM 97.3. My name is Ugodre Obichuku, and I do this every Monday 8 to 8:30. We have been talking about global stocks as well, and that has turned red. The entire global economy looks like it's bracing up for a major market sell-off this week. So this is going to be a very, very long week if you're not paying attention. So I've explained what happened. If you missed any of that part, you might want to go back and check out our recorded version of the show. It's going to be on Nairametrics later today. I've also been talking about Nigerian stocks, that companies that released their result last week. I don't know if you paid attention to the kind of losses that I've basically spoken to now for some of the major companies. MTN losses, Airtel losses, Dangote Sugar losses, Nestle losses. What else again did I talk about? Yeah, I talked about 4 of them, all losses. What does that tell you? I mean, think about it. When you have these big companies all posting losses, what does that mean in terms of Nigeria's GDP or Nigeria's economic growth? What do you think, guys? Do you think that with this sort of losses, we're going to have another economic growth? We're going to record economic growth in Q2? I mean, but people will tell you that it's not really losses, that's revenue that matters, top line, because GDP is really about how much you produce, your output, not necessarily a profit. But there is some concern there. So we go to Wema Bank. Wema Bank also releases result. One of my favorite banking stocks, by the way. This company just operates stealth and they just sort of execute, and their numbers have been awesome. Don't make too much noise, but it looks like they have very good numbers. Interest income came up 79% higher at 76.6 billion for the quarter. Remember, at Nairametrics, we deal only with the quarterly results. Profit after tax for the company was 16.9 billion, more than double, up 231% year on year. Earnings per share at 3.16 kobo. Wema Bank's performance looks like was driven by impressive interest and non-interest income growth. The share price did end at 6.30 kobo, so currently trading at 2 times its price to earnings ratio. Want to check out that stock. Looks like the share price is pretty much where I want it to be at the moment. It probably needs to dip further for there to be a buying opportunity, but at this price, looks like the company is pretty much solid. Investors seem to be pricing it pretty well. I'll move on to First Bank, our FBN Holdings. FBN Holdings also released its numbers last week, so it's the first of the Fugas that released their numbers last week. Pretty interesting. It looks like most companies associated with billionaire investor Femi Otedola tends to always release their numbers quite early. So interest income 288 billion, up 132% quarter year on year. Earnings per share at 40 kobo per share. Customer deposits 15.1 trillion. That's the amount of customer deposits they have, up 42% year on year. Incredible numbers there. So net assets also at 2.2 trillion. They did also push out a pre-tax profit for that quarter of 156 billion. I think from our records, that's been first FBNH's best ever quarter. Coincides as well with the appointment of the new CEO and, of course, Otedola as chairman for the first time working together. So good numbers for FBNH. Share price currently at 20 naira 50 kobo. Price to earnings ratio 1.5. Remember I told you price to earnings ratio is essentially the market price of a share divided by the earnings per share. The closer that number is to 1 or lower than 1, the cheaper it is. It could also mean that investors don't think the stock is that valued, or they're just undervaluing it. But the farther away it is from 1, the more expensive the stock is. So FBNH at 1.5 x, trading at 1.5 X as well. So we move on to the oil palm producers. If you don't have any of these stocks in your portfolio, I think I mentioned one of them last week, Okomo Oil or Presco, you might want to reconsider whenever there's a buying opportunity, because these stocks have been, look, for the last decade, I haven't seen Nigerian companies that have posted profit growth year after year, regardless of what the economic situation is. It's just incredible, these two agro companies. Whether it was when we had COVID, or whether it was when we had that, problem in 2017, or whether it was just last year when we have this FX crash, these guys, it's as if they're just kind of insulated. They just make all that money. And so, look at it. Presco, revenue up 73% to 45.4 billion last quarter alone. And of course, operating profit, that number that I tell you that I like to look at, was up 130% to 22.7 billion. Pre-tax profit up 189% to 14 billion. This is a company in Nigeria, and these guys don't have all the same FX issues that most of these other companies have. It's just a solid business. Same with Okomo Oil. I think I reeled out some of their numbers last week as well. So share price is up 6.78. Share price gained 6% last week. It was, of all the stocks that I've talked about today, this was the only stock that had a share price gain of 6% plus to close at 441 naira. Price to earnings ratio, that number is 7x. So investors just assign incredible valuation to this company. They just believe that their growth prospects is high. And how do you doubt them? Look at, if a company is growing its profit by 189% year on year, dude, what it means is that the share price could always keep growing. So it's just an incredible stock you want to own. I don't own this stock at the moment, but I'm really, really looking at it. So I can't wait to see a buying opportunity here. 441 naira seems pretty expensive for me at the moment. Might not, doesn't necessarily mean it's not a good buy, but this looks like a stock to own. I did mention Okomo as well last week, so that's another incredible stock. So these two stocks, you want to put those stocks on your radar. And we'll move on to the brewery sector. Brewery sector has been scrambling. I think I mentioned Guinness last week. Guinness also came out with their numbers. The numbers was pretty bad last week. Nothing that you can blame to the company itself. It's just the way Nigeria has been, and some of the economic issues that we've had impacted largely on Guinness. And then sometimes people will tell you beer companies are bellwether for how Nigerians are feeling. And so revenue for international breweries, the third largest brewer, was 119 billion in the second quarter, up from 61.7 billion. So it wasn't like they didn't do that well. They did do well, but of course, if you dollarize it, because international breweries is owned by AB InBev, then that's much smaller. But where the problem is still losses. International breweries just keeps reading out losses, and the loss before tax was 61.8 billion, almost double the 37 billion they had same period last year. And so earnings per share is down negative 1.79 naira, and share price is at 4 naira 20 kobo. International Breweries is one company that keeps recapitalizing. I kind of think that the owners of the company, being BF, still believes that they need to be in this market, if for anything, to continue to compete with the likes of Nigerian Breweries and Guinness. What is also quite baffling to me is that I was in the East recently, for a barrel, and a lot of the alcohol that they were consuming there, because I was paying attention, you gotta, if you're investing in Nigerian stocks, you gotta pay attention to the products, everyday products that you see that are sold by these companies, because it gives you an idea of how well they're doing. And I was looking around the table, and a lot of the bottles they were drinking were brands made by international breweries, and I can ask questions. And people are like, "Oh, that's what all they drink here." Or they consume most of international brewery products around, the southeast. So maybe that's even reflecting the number. Like I said, 119 billion in revenues. So the issue I think they're facing is cost, not necessarily that people are not consuming. So cost must be a problem for them, and not able to contain cost, or not able to grow revenue enough to contain cost. And you could also see that with Nigerian breweries, in Nigeria's largest brewery by size, revenue was up 63% to 251.8 billion in one quarter. I think in one quarter. And then pre-tax profit, pre-tax loss was 50 billion. So this year is likely going to be another loss for Nigerian breweries, because we had those losses last year, and looks like they'll have another loss this year. And the company is also dealing with balance sheet related issues because of the impact of these losses on its return earnings. So it's going to be a very, very tough period for you if you own stocks in Nigerian breweries or international breweries. You might just want to ride out that storm and then average down as the share price is going down. Share price currently at 26 naira per share. Pretty likely that it might come under pressure, but you never know. At some point, the share price also rallied at some time this year. I think investors kind of thought maybe something was going to happen there. But that is one stock you want to watch. Again, it's not because the stock is going down you should exit that stock. Could be a buying opportunity. And then finally, we're going to go to Total Energies, the energy group. There are like three of them. Let me see if I can quickly run them before time runs out. Total Energies did pretty well. 260 billion in revenues, up 86%. Profit after tax actually was 9 billion, up 96%. So the share price gained 10% last week to 427 naira. Investors loved what they are seeing. Price to earnings ratio is 5.9. This has been one company that has been doing pretty well. I can't regret why I sold this stock a few months ago. But doing pretty well. I mean, I did sell it as a nice profit, but the stock is doing well. Corn oil as well. Release their numbers, revenue as well up 71%. So oil and gas companies on the exchange all doing pretty well. Share price 144 naira per share. Price earnings ratio 8.76. Pre-tax profit 4.6 billion, up 13%. And then finally Seplat also did pretty well, even though their numbers are in dollars. I think their share price was 3,730 naira as well. Pre-tax profit here, I think in naira is 140 billion naira. I hope this is correct, but that's what we have for Seplat, another company that is doing. So all the oil and gas companies are doing pretty well at the moment. All right, guys. So that has been Follow the Money for this week. This episode brought to you by Nairametrics. If you miss any part of this, you can always go back to any of our podcasts, any of your favorite podcast platform. Just search for Nairametrics Follow the Money, or go to Nairametrics website, or download Nairametrics app. Better still, you can also get the podcast there and you see everything that you may have missed. And of course, follow my daily YouTube podcast. I do break down a lot more things there. I have a couple of videos up already for yesterday and for today. One particular, whether I should invest in treasury bills or invest in dollar assets. That's one that you might want to listen to. That is me signing out. Do have a profitable week ahead. Goodbye.